Donald Trump might be pissed because a lot of people this morning are assuming that Donald Trump is just going to taco. In other words, Trump always chickens out when it comes to new tariffs. Part of this is because yesterday at the dinner with Bibi, Donald Trump suggested that the hard deadline for these new tariffs that are being implemented, that are somewhat similar to Liberation Day tariffs, will be August 1st, unless somebody has a better idea. Which that opened the door to people saying, Taco Man is back. He's going to chicken out. He's not actually going to try to collect these tariffs. He's already de facto delayed the tariffs another 3 weeks beyond the July 9th tariff deadline that he told us we would have 90 deals by him. So far, instead of getting 90 deals in 90 days, we've gotten 2 deals, one of which with a deficit surplus or a trade surplus country rather than a deficit. And then, of course, Vietnam being the deficit country. That said, Donald Trump appears to be seeing a lot of the potential headlines calling him taco, and Donald Trump is trying to be clear that he's not a flip-flopper today. He says, as per letters sent to various countries yesterday, this just moments ago, in addition to letters that will be sent today, tomorrow, and for the next period of time, tariffs will start being paid on August 1st. There has been no change to this date, and there will be no change. Notice how now he's clarifying. We're not changing the date. In other words, all money will be due and payable starting August 1st. No extensions will be granted. Thank you for your attention to this matter. This is, again, because people are anticipating that Donald Trump is just going to somehow weasel out of these Liberation Day level tariffs. And I think when we talk about Liberation Day, we remember the market was very frustrated with some of the tariffs that we saw imposed on Liberation Day because they not only seemed to not be backed by any kind of reason or math, rather just simply some funky calculus in terms of how much of a deficit countries have, and then somehow dividing that into our trade to come up with a tariff figure. But when we look at Liberation Day tariffs versus some of the tariffs that we're getting now, Laos got a discount from 48% on Liberation Day to 40%, Myanmar from 44% to 40%. But more importantly, countries like Japan and South Korea, with whom we have a lot more trade with, pretty much right at their Liberation Day tariff levels. And so this is where a lot of people are wondering, wait a second, this isn't great. Now, could it be? Could we end up using this sort of threat to coax countries into making a deal? Well, that's the hope. The hope is that these now returns to Liberation Day levels on some of our larger trading partners will force them to negotiate a deal. The biggest concern, obviously, is that we don't end up getting a deal, and instead we end up actually getting the true pain of Liberation Day. Now, that has been substantially kicked down the road. See, in April, we thought, oh my gosh, if we end up having these tariffs, we're going to be in a recession by the third quarter. Well, we're now in the third quarter, and frankly, we haven't seen not only recessionary numbers, but we also haven't seen the tariffs imposed at levels that would actually induce a recession. In fact, if you take a look at Liberation Day, we went from before the Trump administration of an effective trade-weighted tariff level of 2.4%, all the way up to almost 28% on a trade-weighted effective sort of tariff rate. Since then, we paused a lot of our tariffs and we reduced a lot of our tariffs, going all the way back down to a May 29th low of under 7%, currently sitting at about 15%. So we're still off Liberation Day tariff levels, but now with these new tariff levels, these new letters going up, we would expect August 1st some of these levels to go back up, which means we basically kicked the can down the road 4 months. From Liberation Day to August, so start of April to August, we basically kicked everything down the road 4 months, which means it's possible you don't actually start seeing some of the damage of tariffs start showing up, assuming there are not further extensions and assuming that Donald Trump is not flip-flopping on us again. You actually wouldn't really expect to see broad-based tariff impacts until maybe Q4 or Q1. And maybe they're purposefully trying to kick the can down the road because they're trying to get to a new Fed chair. Now, that's not even to mention the flip-flop of Donald Trump. I'm actually thinking about, we made these little flip-flops for House Hack because everybody loves Kevin and flip-flops. So I was thinking about changing these to MAGA, so I feel like it'd be more appropriate, little flip-flops here. So it's kind of cool. You know what hasn't been flip-flopping? Gold prices. Holding stable so far all year. And they're coming off a tear, so what's next for gold prices? Did you know that central banks are loading up on gold, including the Chinese central bank? They're dumping dollars and bonds, and they're buying gold, hand over fist. And this is why I want to introduce to you Lear Capital. They're a trusted partner for when it comes to buying gold or silver. The reason a lot of central banks are diversifying to real money is because they don't have to worry about currency risk. They don't have to worry about the debasing of a currency. Instead, they can invest their capital into something that they expect will be protected from other central banks around the world printing money or crazy fiscal policies by congresses and legislatures and parliaments all across the world. So this is, I think, why central banks are making a smart move and they're buying gold or even silver instead of just relying on currency-based investments. It's too risky. What do you trust more, gold or a politician? And that's why, much like how I like investing in real estate, precious metals are a hard asset. I know they're going to be there for me, and if you want to get access to some hard assets that at least Goldman Sachs says could reach $4,500 or more within the next year, heck, now all of a sudden you've even got institutions across the board saying, well, maybe it is time to pick up some more gold, you might consider Lear Capital. They're an education-first company, no pressure to buy. A company with a 24-hour risk-free purchase guarantee, over 27 years in the business, almost 30 now. Over $3 billion in trusted transactions, thousands of 5-star reviews, lots of gold companies to choose from, but Lear Capital is one that I trust, and I highly encourage at least give them a call. 1-800-707-4575, or go to learkevin.com for your free gold and silver reports. And remember, special offer to first-time buyers who mention that you heard about Lear Capital from me. You can get up to $15,000 in bonus gold or silver with a qualifying purchase. So take a peek at Lear Capital. Go to learkevin.com. Use my sponsored link in the description down below. But anyway, take a look at some of the commentary that we're getting. So this is the editorial board of the Wall Street Journal. They call Trump Tariff Man. He's back to being Tariff Man. And the concern that they have is that a lot of our cars come from Japan and South Korea, as do our washing machines and some of our appliances. Think Samsung products, think the Toyota vehicles. This is a lot. 1/3 of our vehicles come from these countries. And so we're looking at about a 50% tax increase on the taxes that are already implemented on some of these vehicle companies. Now, I think there's a limit to how much consumers can really pay anymore. In fact, somebody in the chat here just mentioned that Bloomberg is now reporting that so far Amazon Prime Day sales are declining year over year. Now, to be determined, because Prime Day is just getting started, or Prime Week is just getting started, so to speak. But it does seem like we keep extending how long these sort of sale periods are, to where, one day is turning into many different days, and a week, or a day is now turning into a week. You're kind of killing some of the urgency, but there's also possibly just consumer fatigue, that consumers are saying, you know what, it's time to start scaling back. And so I don't think consumers can really pay these prices. And so this actually adds more of a delay to tariff impacts, because you have to wait for them to show up in company earnings, which company earnings are always delayed, and then you forecast hopium, and it could take years to get through all this tariff stuff. So any of this hope that these tariffs are going to cause a really rapid recession for the bears, probably not likely. Remember the Chinese tariff negotiations in 2018. We negotiated for 2.5 years with China, and then COVID hit, and that was the only thing that delayed or sort of temporarily shelved tariff negotiations. But anyway, Donald Trump yesterday said he'll consider an adjustment to the letter, which is the opposite of what he just truthed, saying there won't be any extensions, although he could also theoretically say that, we're not extending your requirement to pay tariffs on August 1st, but we're going to negotiate a deal with you before then, maybe. But we've heard his talk about negotiating deals hasn't been working. Here's some of the imports and exports from Japan and South Korea. included billions of dollars in industrial machinery, pharmaceutical preparations, medicinal equipment, computer accessories, household appliances, semiconductors. You can see some of the numbers here. Total trade between South Korea and Japan works out to about 8.6% of total U.S. imports. Still more of our imports obviously coming from Canada, Mexico, and China. These countries each individually getting their own trade negotiations. And so far, we're pretty quiet on what we're seeing with negotiations with the European Union, which is good because the European Union is also threatening counter tariffs or reciprocal tariffs in the amount of about $72 billion, though so far we're not seeing that yet. Some of the comments that you see, I thought this one from John C., not sure if that is John Cena or who it is, but I thought it was an interesting comment because it relates to something we've been talking about on the channel, that you have to really worry about the coalition, like larger groups of countries banding together against us. Someone needs to explain to Taco that all of our allies will eventually team up against us in this dumb trade war. An effective bully works in the corner of the playground or by cornering someone in the bathroom, but a bully who goes to the cafeteria at lunchtime and tries to shake down everyone at once gets a beatdown. Dumb behavior driven by made-up economic theories that have been repeatedly shown to be wrong. And then they reference the Smoot-Hawley tariffs of the 1930s. Keep in mind, with Taco, we are actually seeing way less of a Smoot-Hawley tariff style impact because, quite frankly, markets are under the impression that no matter what Trump says, we're going to end up getting some kind of chicken out on the ultimate resolution of tariffs. I think that's why we're holding on to roughly this 550-280 line right now in the Qs. Now, we've lost a lot of momentum that the market had at the beginning of the day in pre-market, possibly because of Trump's reiteration that, oh, no, we're going to be aggressive this time. We're not going to chicken out. Of course, The Economist, which doesn't really like Donald Trump, so let's be clear, they say the great deal maker is conspicuously short of trade deals. They kind of, slam him for this 90 deals in 90 days, not really going anywhere, and reiterate some of the other aspects we've been talking about. And yes, there are non-trade barriers that we should be thinking about, but do also consider that we kind of flip-flopped on Ukraine. Trump all of a sudden pledging to send more weapons to Ukraine. He told, the Pentagon last week said, hey, we're not going to send more weapons to Ukraine. We're pausing some of our weapon shipments, which was basically a campaign promise of Trump that, hey, we're not going to keep supporting this war. In fact, we're going to end the war within 24 hours. Well, that war didn't get ended within 24 hours. Of course, now Trump is branding that as sarcasm, which we all know it wasn't sarcastic when he said it during the campaign. But he also publicly spat with Zelensky, saying Zelensky doesn't hold the cards. But then privately, when he talks to Zelensky, he says, hey, we had a very important and fruitful conversation. I'm not happy with Putin. I'm disappointed with Putin that he keeps attacking Ukraine. And Donald Trump ends up saying, hey, I had no idea that the Pentagon stopped weapon shipments to you. We'll make sure you keep getting weapons. So it's kind of like, it comes across as a little weak where in private, Trump will be your best friend. He'll give you your weapons. He'll give you exemptions. He'll give you good deals. If you call him and beg him, he'll roll on his tariff policies for Jamie Dimon. He'll make exemptions for companies or whatever as long as they promise potential future investments. But publicly, he talks a big talk. But we're not seeing that right now, which is why people are frustrated. Now, markets make the bet that Donald Trump is going to keep doing this, that privately companies and markets will basically always be able to come out and say, hey, don't worry. It's all going to work out privately. It's fine. And that's probably why when you zoom out, markets are at all-time highs because we're essentially convinced. In fact, we can honestly extend this trend line right here as it's roughly where we're getting ready to, sort of move along here, which is up and to the right, which is fantastic. But what you're finding is a market that says, hey, Trump is going to butter out these tariffs. He's going to fold to phone calls. He's going to fold to market panic. So why not buy the dip? Which is great. And frankly, because we keep buttering out the impact of tariffs, it's likely the impact of tariffs, so we butter out the actual imposition of tariffs, right? Which butters out the impact of tariffs. And if you butter out the impact of tariffs, you actually give more time for companies to, streamline their workforces without sudden shocks to the labor force. You don't necessarily see a massive skyrocketing in layoffs because you get buttered out impacts. You don't necessarily see a massive impact suddenly to consumers because you get this buttered out building up of inventories and sort of trickling out of inventories to your customers. In fact, if you want a good example, look at Restoration Hardware, for example. So Restoration Hardware did spike a little bit on this news about a deal with Vietnam because I want to say about 30% of their inventory comes from Vietnam. But if you go to Restoration Hardware's last earnings report, there's something really interesting that happened. So in Q1, they started building up their inventory in preparation of tariffs. They went very, very low in their cash positioning. Was actually technically their Q4. And then in their calendar Q4, we would have expected to see some inventory start getting burned all the way through May. But what you actually saw is inventory stayed high. Look at this right here. Between Feb 1 and May 1, their cash position stayed really low, between $30 and $46 million, which is very, very low. And their inventory of furniture stayed at about $1 billion. In other words, they kept building inventory. So this inventory buildup that people say, oh, the pull forward was just basically March and some of April, is actually probably just the first half of the year. Maybe even all the way through August 1st, which if you think about it that way, now you've got really a pull forward period of time. Let's go zoom out on this. So if I zoom out, let's go to making a little chart here. Inventory buildup time frame is probably most realistically now March 2025 through August 1, 2025. That works out to 3 to 7, a 4-month period, right? All of March, all of April, all of May, all of June, all of July. It's 5 months. 5 months of inventory buildup during taco phase, right? This really delays, even if we end up getting the actual imposition, even if tariffs actually hit Aug 1, we've built inventories now for 5 months, or we've spent 5 months building inventories, which really I would say delays the corporate impact and pricing impact quite a bit. Now, if you delay all of this impact through to early 2026, markets start pricing in a new Fed chair willing to coax the rest of the board members who vote to go for cuts, right? And then markets get enthusiastic about that. The only reason you end up being bearish is if we're cutting because the labor market rolls over, and so far we've got no data of that. Yes, has the labor market been weakening? Are we in a weakening path? Yes. But are we, expecting rapid cuts because the economy is falling off a cliff anytime soon? No, and I think that's exactly why when you look at the 10-year Treasury yield, it's up so aggressively right now, back up to 4.4. Because the potential for a near-term shock seems to be relatively low. And that's why we've basically consolidated on the 10-year. I mean, look at this consolidation that's been going on for over a year now. You sort of drew a box from, you could even say right here, October of 22 to now. You put a box around this area, you're coming up on a 3-year consolidation on the 10-year Treasury. Probably because markets just price in that markets are going to keep going. Stable, butter out the tariff impacts. And so that doesn't mean that tariffs aren't bad. It just means the impacts are being so spread out. You might see them in smaller misses, but not necessarily in big consolidated lumps of layoffs, which is actually good for markets. Probably why there's no Liberation Day style sell-off, even though we might be somewhat taking a little bit of a pause here in the near term yesterday and today. We'll see. But that's my take on what's going on with the Trump Taco!
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.